Boy, that time flies when they're cutting rates unexpectedly. It's about that time of day again here, folks. Welcome back. Welcome back. Tuesday evening, March the 3rd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best levels of support and resistance, the best entry setups for tomorrow, and how to avoid all those big traps for tomorrow. That's Wednesday's trading session, and I got a great video newsletter in store for you guys and gals tonight. The charts are all prepped up. We get the oil, S&P, Nasdaq, gold. I've got the calendar ready for tomorrow as well. We get some big news tomorrow. I want to make sure you know what to trade around, what to look forward to. We're going to break all this down tonight on the video. Charts are ready, calendar's ready. You're here with me. I'm ready to rock and roll. Before we jump into the video tonight, though, don't forget to subscribe to our YouTube channel. I don't want you to miss every evening's nightly newsletter. Drop those questions in the comments section below. I'll be answering questions after we publish the video tonight. And as always, hit that thumbs up button for me if you tune in every evening to watch this video. In the meantime, let's get this party rolling here. Starting off tonight's video newsletter, getting ready for tomorrow. Let's grab the economic news calendar here for tomorrow. That's Wednesday's trading session. The economic news calendar courtesy of Econo Day. Tomorrow, of course, is Wednesday, March the 4th. We got a lot of news to look forward to here tomorrow, as you can see. We got some ADP employment number coming out at 8:15. We got the ISM non-manufacturing number at 10 o'clock. We got the, of course, petroleum status report at 10:30. And then for all you late bloomers tomorrow, right, the beige book tomorrow afternoon at 2 o'clock Eastern time. So let's break these things down. There's a lot of tradable opportunities we're probably going to see off all four of these news reports. The first one is that ADP number. Now, don't forget the ADP number tomorrow is the biggest leading indicator as we go into Friday's non-farm payroll report. Remember, Fridays, that's the biggest news we get as traders, right? And remember, tomorrow morning at 8:15 Eastern time, we're going to get that ADP employment number, which is usually going to be a bit of a glimpse into what to expect on Friday. Now, just a heads up on this 8:15 number tomorrow, you're probably not going to see a dramatic reaction right away, but you will see some big moves develop in that 8:30, 8:45 to 9 o'clock block tomorrow. So think about that number tomorrow, 8:15. You're probably not going to see a spike off that news, right? You'll probably get a bit of chop, and then 8:20, 8:30, 8:40, you'll start seeing some good movement, and we're tracking that tomorrow in our trade room. What else do we have here tomorrow? We also got that, what I think is probably the best news of the morning tomorrow, and that is that ISM non-manufacturing index. I say this every time we talk about these. Anytime I have an ISM number, ISM manufacturing, ISM non-manufacturing, these are big market moving events. So if you can only be at your desk tomorrow for an hour or so, I would definitely make sure that 9:30 to 10:30, 10 o'clock to 11 o'clock block is definitely going to be on my radar tomorrow in the trade room. And then don't forget, if you're an oil trader, your time is ticking after 10 o'clock tomorrow morning. I love trading oil, but after 10:15 on a Wednesday morning, you got that inventory report at 10:30 every Wednesday morning on oil. 10:15 is really your cutoff on crude oil. So if you're trading oil tomorrow, make sure you get to those setups early. We are definitely looking forward to response off the ADP, off the ISM, but after 10:15, they'll be very careful trading on the oil markets until after about 10:40, right? 10 minutes after the news comes out, and then we'll get back on the horse and start riding again. And then, I always caution you guys, trade in the afternoons. The afternoon session, you really got to be careful because there is two distinct separate sessions. There's the morning session and there's the afternoon session. The morning session is simpler. There's not as much information to process between 8 o'clock and 11 o'clock Eastern time. When you come into the afternoon, right? And when I say afternoon, the afternoon session usually starts about 12:30 p.m. Eastern time. And it goes, I mean, obviously markets are different, right? Gold closes at 2, right? Oil closes at 2 or 2:30, right? E-minis, of course, 4:30, 5 o'clock for the cash. But usually you can get away with trading up till about 3:30 p.m. That 12:30 to 3:30, obviously 11 o'clock to 12:30 is lunch. After 3:30, markets start getting really impulsive as you go into the closing bells. So you know me, I always caution you guys about trading the afternoon session, because what happens is you've got to digest everything that day. So really the hardest part about the afternoon, we do have that big news tomorrow at 2 o'clock, and you definitely bet people will be listening in. We had the emergency rate cut today from the Fed. You bet traders tomorrow. You know, these beige books are not always going to be tradable events. Tomorrow, though, with that emergency rate cut today, you have to imagine people will be dissecting that beige book announcement at 2 o'clock, and we may see some great setups that come in the wake of that news, right? We're not talking about trading the news. I'm talking about trading the 10, 15, 20 minutes after that news comes out. The one thing I want you to be careful about tomorrow, though, and this goes for any time we have news events in the afternoon, you've really got to have a good grip on your technical analysis, because you're going to have the London session, the U.S. morning session, and half of the U.S. afternoon session. You're going to have to be able to get your arms around all of those technical clues. That's why I tell my new clients, start with the first couple hours of the morning, because there's not a lot to analyze yet. It's very simple. It's very straightforward usually in the morning session. But once you start getting into that afternoon session, right after 12:30, again, big potential market moving event tomorrow at 2 o'clock, but be aware, you've got to have your arms around all the channels, all the ranges, right? It's a lot for a new trader. So careful out there tomorrow if you're a new trader. Don't try to be a hero on that beige book. So as you can see, you got a lot of tradable events tomorrow, starting off at 8:15. My money's on the 10 o'clock tomorrow being the best news of the morning. Maybe that beige book, though, surprises us tomorrow afternoon. And don't forget, guys, right, as I go over this right now, don't forget, every morning, 8 o'clock Eastern time, we trade this stuff together in our trade room. You can find all the membership information to get registered for tomorrow morning's trading session as an advanced member. I'll put all the buttons, all the links, the description of the YouTube video, or if you're on the blog right now, just scroll right below the video tonight and you'll find all the buttons to get registered for tomorrow morning's trading session. So now you know what I'm watching on the time for tomorrow. Let's now get to our charts here for tomorrow's trading session. Got some oil, S&P, got some Nasdaq, and some gold. Let's take a look first here at the black gold, the Texas T, the crude oil futures. Now remember, tomorrow on the oil, early in, early out, right? It's a smaller window because tomorrow, of course, is a Wednesday. What do we know about oil right now? We know we had that big spike up, and just like we had anticipated, we got that trading range. And this morning, the buyers kept buying low, buying low, buying low, buying low, until, you'll notice this recently, they started now to struggle a little bit, right? Really, it's ever since we heard about the rate cut, right? Once we got that surprise rate cut this afternoon, right, we saw that one strong leg, two strong legs, almost three strong legs down. When I look at this market right now, I see a bull market into a trading range, but I see buyers struggling, right? Really struggling right now. I see them trying once, I see them trying twice. If I'm a seller right now, I'm now thinking, give me something off the high of this so I can ruin the afternoon, right, of these buyers, right? So I would imagine there'll be a lot of sellers who would love to get short just off the underbelly of that trading range. So I would anticipate you're going to see some bears enter the market tomorrow, try to probably go back down to that 45.26. That's the gap that was, of course, from last weekend's gap, right? It was basically yesterday morning's gap. So 45.26 is where they're trying to go to in the short term, and then possibly all the way back down to retest those major lows at 43.33. Buyers, though, the big question I have right now, the big kind of the $1 million, or maybe the million barrel, right, question right now is do these bears really have this? You know, do they really have this right now? You'll notice we came all the way back down to that prior swing. Buyers are defending it. I honestly think the buyers have a very good shot of running back into this range right now, but it's probably not going to be easy, right? It's probably not going to be very easy. So I'd like to be a buyer going back into the range because honestly, I just don't see this thing rolling over yet. You know, we saw what happened on the S&P and the Nasdaq, right? If you didn't see that, we're going to grab it in a second here. The Nasdaq and the S&P, they didn't stair step lower, they collapsed lower. That's the type of reversal I would have expected here on the crude oil. So I'm not going to lie, I'm looking for a long side right now, but I'm anticipating that's going to be a little bit abrasive. And so that's really where the basis of my strategy for tomorrow comes in. What I'd like to do is give these buyers kind of the benefit of the doubt. They've tried once, they've tried twice. There's still hope for these buyers right now, but the problem is I've got to be careful about these bears. I'm anticipating them going to be coming in and really trying to make my job a lot more difficult. So as the market goes higher, what would I anticipate from these sellers? I would anticipate they're probably going to give it a couple swings here as we go. And I have the perfect entry pattern for us to protect ourselves against the sellers coming in, but at the same time, though, giving us a nice entry setup to get into that trade going into the long side here, back into that range. I'm going to call this one a crown reversal. As we go higher here, you're waiting for the bears to try once, waiting for the bears to try twice, and I'm looking for a trap low to buy off of that low. So as we go higher, right, as we go higher here, again, we're anticipating bears up here. Let those bears try once, let them try twice, and then look for a trap. If I can get a trap down here, this will accomplish everything. This will allow me to let those bears dig their own graves, so to speak, right? Let them wrap that noose around their neck by trying to sell off the high. Then I know where the stops are, right? The stops are sitting right above that high, and that'll be an easy way to send this thing back inside. But of course, I don't want to buy up there, right? I don't want to buy inside the no trade zone. I don't want to buy in the middle of that range. What I want to buy is I want to buy underneath it, right? And that's where that trap really comes in handy. I call these a crown reversal pattern. I say that because if you watch this newsletter, you probably have heard me say before, this is really just a seller failure with a trap low. It's a two-try, right, seller failure with a trap low to be a buyer, right? It's a little bit more complex of a pattern, but I think you're going to have to use that to a pattern because you've got to protect yourself against buying too high and buying too aggressive into these bears. Now, we may also see this market, it may slip right inside the range here right now. So as it tries to go higher here, right? What if what if this thing just runs right back into the range now? If it runs back into the range, I've got to be careful trading inside the range. What I want to do is get underneath that trading range now, get those sellers to try to sell the breakout pullback, and we can buy it later on. Now, this is something that may take a while, right? Especially overnight. This seller failure, again, trying to buy underneath the range. I'm not trying to buy inside the range, right? That's why I call that the no trade zone. But imagine now we go back into the range, we sit sideways for a while, we get that shot going lower, the bears try to reverse it, they try to sell off that pullback, and we're now buying right into those stop losses for that move going higher. Those are two great, reliable setups to buy underneath the low of that range. Now, what if the market runs back into the range and sits here for a while? Can I sell above the high? I definitely can. I can use buyer failures, but because that momentum will be so bullish, we're going to use what's called a nested failure, which is a little bit more reliable than a regular failure pattern. It's a lot like the crown reversal I mentioned before. We let the buyers try once, buyers try twice, and we'll sell off the high. Remember, it's a range, right? Buy low, sell high. We're talking about buying low right now, but again, if we sit inside that range here for a while, and then we poke our heads up, right? I can sell this thing as long as I can get the right entry signal. As long as I can let those buyers, again, kind of dig their own grave trying to buy that pullback. Now, I know what you're thinking here. At what point could I buy this thing as it goes higher? You can buy this thing as it goes higher if it ignores that range, right? Here's what I mean by that. If it ignores the range, meaning, let's say, for example, we make a big, strong blast up, right? OPEC comes out and says we decided to cut production. We talked about that last night on the newsletter, right? We get OPEC, of course, meeting on Thursday and Friday this week. We get the oil report tomorrow, but then Thursday and Friday we get the OPEC meeting in Vienna. So who knows, right? Tomorrow morning we might come out and this thing might be running as we go higher. Two patterns I'm watching for if this thing really gets going here to the upside. One would be a 1, 2, 3 reversal, strong move up, and the key to this is a strong jump off the moving average, because that jump, you'll notice they haven't got it, they didn't get it, they didn't get it, they didn't get it, right? You'll notice they have yet to get that strong reaction off the moving average. If they can get that strong reaction, now we know it's on. Now I can mark up a new channel high, I can bring that channel low down off the low, I'll draw it off the major lows and look to buy the pullback off that hidden channel. I call this a 1, 2, 3 reversal into a hidden channel pullback. Another pattern to keep an eye on would be if this thing just starts ripping higher, right? If it starts, again, this would be the assumption that something happens overnight. We start ripping higher here now, right? Shallow pullback, higher high, trap low. This is one of my favorite patterns whenever I have a market that won't pull back, right? You know what I mean? So again, I want to see that 1, 2, 3 reversal so I can structure the channel and I can buy the low of that channel. But remember, you know, sometimes the market doesn't pull back. Sometimes it just runs. And when it runs like this, that's when you want to look for that slight higher high, right? Shallow pullback. And this will usually be just below that moving average. All right? Makes sense for you here, right? So we're buying that trap below that low. Boy, as you can see so far, we've covered a lot so far here, right? A crown reversal, a failure pattern, a nested failure, 1, 2, 3 breakouts, right? Two tried traps. Man, oh man, like I mentioned earlier, we'll be trading all of this stuff together tomorrow morning, 8 o'clock Eastern time. The membership information is in the description of the YouTube video. But if you're not going to be with me tomorrow in the trade room, the next best thing is I'll put a link up here for our free trading classes. If you're a relatively new trader, or if you just simply haven't been able to get the consistency that you're looking for in your trading, I would definitely take that free trading course at the very least, just so when I say failure pattern, you know exactly what I'm talking about with that. So grab that link that's popped up there in the upper right hand corner, and again, get registered for that free course. I'll put all the links for you guys for the free course, right, for the membership tomorrow morning in the trade room. I'll put all the links for you below the video tonight in the description or in the big red button below the video tonight on the trading blog. Okay, so now we get a pretty good plan here for what if the market runs higher. Now, what if we go sideways here? If we go sideways here in the short term, this will now take over into a new range. So if we sit here for a while, for a couple hours overnight, right, now this range up here gets moved down. Simple as that. So if we start going side, and again, right now I can't really see it right now, but let's just say, for example, right, we sit here for a while and we start going sideways. Once I start seeing a range up here, now I know exactly what I want to do. I want to sell high using a buyer failure pattern up above the high of that trading range. It's pretty simple, right? Once we start seeing a range, that will confirm now the range up here has now moved down here, right? It happens all the time, right? 48 was the balance there before. Maybe they move it down to 47, right? That will happen every once in a while. If they move that range down, now we know what is a range. Buy low, sell high. It's a bear move at this point into a range. I'm waiting for one try, strong move up. I'm waiting for buyers to try to buy the pullback, and I'm selling into those stop losses, right, of those counter trend buyers, those breakout buyers. Now again, remember, this is only if we start going sideways here for a while, right? So we start seeing this range form overnight in Asia. It's slow, it's sloppy. We wait for the price to pop up and we sell into the stop losses of those breakout pullback buyers. Now, what if we run lower here? There's a couple things I'm watching for as we go lower. One of them would be if this thing turns into like a wedge, right? This might turn into a wedge down here, right? You know, the market is relatively emotional because of this OPEC stuff coming out later this week. So if we start going into a wedge down here, just keep that channel right on there. I'm going to mark up that level right there, and that's going to become my sweet spot, right? So if we, you know, again, if we kind of grind lower here, I'm going to look for a new channel, and pretty much same thing, right? We'll try to sell off the top of that new channel. And as you can imagine, it would probably be like a buyer failure into a seller pullback. And again, I've got hundreds of examples, just so you know. I have hundreds of examples of these failure patterns, pullback patterns in that free course that I mentioned linked up in the upper right-hand corner, right? I'm just simply drawing them up right now. You can see lots of examples where you apply them to our favorite markets on that free trading course that I mentioned before. So be aware of that, right? That will be something we're watching for, right, to sell up around those highs. And again, it'll probably be, with that move lower, it'll be most likely a buyer failure, right, off the moving average up around that high, right? Buyer failure into seller pullback. Buyers try and fail the moving average into a bear pullback there. It'll look a lot like this pattern right here, right? As it goes down, buyers try and they fail. So if we do keep grinding lower, keep waiting for that pop to sell up around those highs. Now, two more scenarios. One would be a 1, 2, 3 breakdown. Mark the low, mark the high. Get after it before we get to that gap. Okay, that'll be the one big caveat there. Remember, it all starts with a strong move down. If they can hold that pullback off the moving average, strong move off the moving average, now I'll remove this channel and I'll start looking for a new channel. Mark off the low, up off the major high. I call these hidden channels, and I'm looking for a short off the high of that hidden channel. Where's my target? 45.26 is that easy objective right now, and you'll see what I mean on the S&P and the Nasdaq. And of course, if you have an extra bullet left in the gun, you got that big target down around 43.33, right? If you really want to let this thing rip for tomorrow. The next pattern would be if we don't get the pullback. Right? I hope we get the pullback, but if we don't get the pullback and the market just keeps on going lower, what's my next go-to pattern? A 2-try trap pattern. Now again, you're going to want to get into this before you get down to that gap at 45.26. But remember, right, most of the time you're going to go 1, 2, 3, right? You'll hold that pullback, you'll find that channel and sell off the top of that channel. But remember, sometimes things get spooked and the market may collapse. And if it really collapses on you here, right, now if it keeps on running, you're not going to wait for a pullback now. You'll probably get a very shallow pullback and then mark up that high, right? I say shallow pullback, it won't pull back to the moving average. Mark up that high, watch that trap, right? Watch that trap. What happens is when you get those big moves down, nobody wants to chase after them. So what happens is professionals are waiting for that trap high for the ability to basically just sell when those buyers think the market is reversing right back up. So I got a lot of really great, reliable setups you can see here. We are waiting for tomorrow. All we need right now, I'd love to get that crown reversal off this low and back up into that range. Time will tell though. And again, tomorrow morning, 8 o'clock Eastern time, I want to see you there, right there with me. You can find all the registration information in the description below the video, or just scroll down on the blog right now. Let's keep going. Oil looks good. How about some S&P? S&P, of course, now you can see what I'm talking about, right? There's that gap fill on the S&P. S&P, what do we know about the S&P? We know the market began inside of a range. We know that once my boy Powell, right, they of course announced that, right, that emergency rate cut, unexpected rate cut, market spikes, right, pumps, dumps, and rolls over, right? Here's a great example of what I would have expected on crude oil. We make a strong run lower, and we run off the moving average. What is that? That's a 1, 2, 3 reversal, right? Again, look back on oil, you don't get that. Right? You get a strong move down, but they're not finishing the job. And that's what leads me to think that we've still got some time here to be a buyer on the oil. Over on the S&P though, right? We look at the S&P right now, you can see strong move down, pull back, and blast lower. That's what really tells me now these bears have the edge on their side. The hard part now is is that this is gross down here, right? You can definitely see they wanted to go back to the gap fill. They wanted to go back to the big round number. And be aware, when I say these gaps, I had a question about this on last night's newsletter. When I say these gaps, what's happening right now is you've got these, Friday afternoon closes, right, to Sunday evening opens. Right? Now the gap's been filled. You'll notice it's been filled many times already, but that line, and this is a great example of where you've got to be you got to be creative with how you use these levels. The markets are always finding new ways to use these levels. In the old days, once a gap got filled, you pretty much forgot about it. Lately though, the past 4 or 5 months, those weekend gaps, right? That gap between Friday and Sunday evenings open, Friday's close, Sunday evenings open, that gap area, Friday's close, tends to be a real big magnet that keeps on drawing price right back to it, right? And we'll use that, right? Stay away from obviously trading around it. It's a magnet, so we'll buy low, we'll sell high, try to use that magnet for our targets. So we know we're down at that gap. I would assume, right, that is exactly what oil might have on its radar for tomorrow. I think the hardest part here, though, is trying to structure this trade. We just had a real strong move down. They didn't finish the measured move, which just goes to show you how important that gap was. But remember, anytime we see a strong move like this, you got to think they're going to get that next leg through. So I would imagine we're going to at least get down to that low. And really from there, it's really tough to tell kind of where we go from there, because you can see it's kind of a range forming at this time. Now, where do the bears want to get to? The bears want to retest the low at 73, but they really want to get back down, right, to retest that bloodbath low, right, at the end of February. So we know that 28.53 half area, right? That area down there is definitely the objective here right now for those sellers. The buyers, obviously, they want to get back up to retest those highs at 31, let's say 37. Up to retest those highs. So we know we're bearish. We know we are underneath a range, and you can see an example of this, right? We had one range here. The market breaks down, and it looks like they're now going to go ranging here around that 3,000. What happened? What would cause a market to change ranges? How about a rate cut? How about a big news event? How about a natural disaster? How about a political announcement? Something may happen that changes the opinion of value, right? We came in this morning, and I guess the opinion of value was 30.80, right? Now, as we close, the opinion of value is now obviously around 3,000. So if we're seeing a lot of volume piling up down here, we can see that's acting as a magnet. I'd like to use that area for my objective. And really at this point, it's very similar to crude oil, with the sense that we could go back into that range. But at the same time, though, the bears have a lot more authority right now than these bulls do. And so I've got to be a seller before I can be a buyer. So let's put the plan together here right now on the S&P. And again, don't forget, we got a lot of news tomorrow, right? Especially that 10 o'clock news, that ISM non-manufacturing. Okay. What if price goes up here first, right? We'll cover all the bases. Up, down, and sideways. What if we go higher here? If I can go higher here right now, remember, this is a range, right? And what do we do with ranges? We buy low and we sell high. What's my favorite patterns to use in ranges? If I'm buying low in a bear market, I like to use that nested 1, 2, and back up, right? Nested failure. You can see an example back here, right? Go down, 1, 2, back up, right? When you're trying to reverse direction, if I have a range with a bear bias right now, what does the range tell me to do? Buy low. If we run lower, moving average comes down, I wait for the bears to try once, try twice. Once I see them trying twice, now I know where their stops are, and I can buy into those stop losses. A nice easy target for this trade long is the other side of the range, and then measure the distance below it and use that, what I call pendulum swing, for your runner. Very easy way to trade the reversal below the low of that trading range. What else can I do with this? I can also, of course, with that range, sell high. Now, one of my favorite ways to trade ranges is to find what I call expanding triangles, right? So you get this trend line coming up off those lows. That is on my radar, absolutely, to sell above that range, right? So if we end up if we end up here, right, sitting sideways here for a while, I'd love to see these bears, once they run out of bullets, so to speak, I'd love to see them get a pullback. I'd love to see these buyers, right, confuse this now with a bull market, try to buy the pullback, and once they do, what do we know now? Yeah, now we know where their stops are. Now we know where those breakout buyers, where their pain points are, and now we can sell right into those stop losses. It's a very simple strategy when a market has a range. Buy low, sell high, and the key is to focus on failures, either straight failure patterns or nested failure patterns. And again, we'll talk a lot more details of those in our video classes, right? Not to mention our free trading class, which are linked up in the description of this YouTube video. Now, if we really jump, right, here's one thing you want to think about here. I've drawn up this trend line here, right? That trend line, it's not perfect, but this could easily be, we may not run sideways here very much. We may just jump, right? So if we jump as we go higher here, that's going to be a lot of momentum as we go, right? Again, I'm waiting for those buyers, right, to try and fail so I can sell it back down. But could I buy this too? Right? Could I buy this as it's going higher? You can, but you got to look for that same pattern we talked about on oil. So this thing just jumps going higher here. Bears try once, higher high. Bears try twice, trap low. Now this will be all about feel. It'll be all about feel, right? It'll be all about how that move goes higher. Now remember, there's a big difference here between these two patterns. A sell setup would be we go up, the buyers try to buy the pullback, they fail, and we're selling into those stop losses. That's a sell. Okay, it's very different than if those buyers run up, shallow pullback, higher high. That's a different setup now. It's a very small difference. What's the big one? The big difference is they don't pull back to the moving average, and they immediately make that higher high. Now, mark up that low. Buyers will now start piling on here for that trap low. I call this a two-try trap pattern. It is a great setup when you got that real strong punch followed by that shallow pullback, right, into a trap low. That will get you back in to that trading range going long. And then obviously, right, if we end up back into that range for whatever reason, we'll keep looking to buy underneath the range using seller failure patterns underneath that range, right? So this market really rips higher here, right? If it really does, there we go, get back on there. If this market really does rip higher here and goes back into this range now, bull bias into a range, what do we do with a bull bias in a range? We buy low, right? We buy underneath. What pattern? A seller failure. We wait for the pullback. Eventually the buyers will give up. The price will pull back. It's not a bear market though. But when those bears, when they try to sell off of it, what do? Yeah, we're buying right into those stop losses to go right back up into that trading range. Also, don't be afraid to go 1, 2, 3 reversal. Could happen, right? Easily could happen. 1, 2, 3. Remember, the key to this is that jump off the moving average. 1, 2, 3 reversal. What do? Do we buy up here? No. We mark the high, we mark the low, we buy the pullback. Okay, don't worry so much about the range right there at that point. At that point, all of that momentum going higher will almost guarantee a retest of that high. And as always, if it doesn't pull back for the 1, 2, 3 reversal, if it's just rips higher here, right? Just rips higher here, one shallow pullback, trap low, same idea, right? Same idea. So for whatever reason we don't get the pullback, look for that two-try trap pattern as we go higher. And again, I'm covering these real fast here tonight. If I don't, the video will be 2 hours long. I want to make sure you get a game plan. If I'm going too fast, pause it, go back and watch it again tomorrow, or don't forget, come join me in the trade room every morning, 8 o'clock Eastern time, and we can do this together. Now, what if we go lower here, right? If we go lower right now, it's that nested, right, failure back up. Remember, 1 try, 2 try, buy into stops. Okay, it'll look just like this one, right? 1 try, 2 try, buy into stops, just like that one, right? Or what else can we do? 1, strong move down. 2, pull back to the moving average. Can they hold it? If they can, strong move off. Wonderful. 1, 2, 3 breakout. Mark the low. mark the high. We're selling now, right, off the high of that hidden channel. But wait a second, what if it doesn't pull back for you? What if it just takes off to the downside and keeps on going? If it just keeps on trucking down, right, look for that shallow pullback, that lower low, and that trap high. Remember, that's the key here when it won't pull back. Oftentimes what will happen is that first little pullback will get disappointing, right, because it won't pull back to the moving average. Whenever I used to get frustrated with that because it wouldn't pull back to give you an entry, but then I realized just wait, because if it missed them there, they'll come back and they'll hit it there, right? Wait for that trap. Also, too, this will almost always line up with some sort of kind of hidden channel here. Be definitely watching for that as well. And then don't forget, right? We want to go down into that 28.89, 28.53 area. That's our big target here for those bears tomorrow. So we're trying to be a seller off these highs right now, but will this thing snap higher? Only time will tell right now. And again, tomorrow morning, I want to see you there with me, and we'll do this all together. Next up here, got the S&P ready to go. How about some Nasdaq here tonight? Now, Nasdaq's in a very similar situation. We began the morning here today on the Nasdaq inside of a range. We saw, of course, right, my buddy at the Fed, right, he calls the rate cut. What happens? It dumps, holds, and runs. Again, this is the type of run that you need to see for a reversal. Now, I realize you might be thinking, well, why didn't we draw the hidden channel there? We definitely can, right? Draw it off there, right, off that high, right? But you'll notice, though, where does it put you? It puts you right into where? Right into a measured move, right into that gap. That's why it's so nasty here, because everyone's trying to sell it, but nobody wants to sell low. And that's why you're seeing it. Everyone pokes its head up, they're selling it, and selling it. Hopefully we'll get something up top here, and we can sell even a little bit higher here, right, for tomorrow. But bottom line is, sometimes you'll get a 1, 2, 3. Sometimes you'll get that 1, 2, 3, and by the time you get the pullback to it, right, you're too low. And so not every, right, remember, everything has to be taken in context, right? We don't just trade patterns. We trade the situation, the context of these patterns. This is not a great spot, right, to be selling. So instead of using that type of hidden channel, I widen it out, right? I widen it out now, right? And I'll look for other ways to draw that hidden channel. Like this one right here, right? Top, top, top. Those fit nicely. Nice little bounce right there, bounce right there. That gives me a lot more user-friendly, right, hidden channel. You know, I always tell my clients the key to the best channels, and channels are great for selling high in a bear move, right, buying low in a bull move. The key to a good hidden channel is to give yourself the ability to risk small to earn large. That's the trick. Right? If you're drawing a hidden channel down and that hidden channel puts you right into a level of support, right? You can risk small, but you can't earn large at that point. So I'm always trying to think, you know, kind of reverse engineer this. How can I draw my hidden channel so I can get a good level of resistance without having to, right, put my risk reward ratio, right, lopsided? That's what gives me that level up here around that 8,700. So we know we're bearish. Right? We know we want to be a seller right now. I'm looking for levels of resistance. I love that trend line, and that trend line is lined up right there with the top of that channel, right? That will be a great spot for us to look for shorts. I think it's pretty easy to see right now. We get a little bit of range going on down here. Maybe you want to call this a triangle. It really doesn't matter to me. I know we're sideways with a bear bias right now. So what are some options here as the market tries to go up, tries to go down, right? Tries to go sideways? Well, first of all, if we can get this mark going up around these highs here now, really anything above these tops over here, right? Get above the tops, get those buyers coming over, get those buyers to try, right? Once they fail, we can sell right into those stop losses and run it back down in the range. Remember, at this point, the buyers will think this market has reversed, right? And once they try to buy that pullback, now we know where their stops are, and we're just going to put our sell order right into those stop losses. We'll do that together, obviously, right? I'll teach you to do it in the free course, and we'll also together, right, in the trade room tomorrow morning. Or, right, how could I buy this market as it goes higher? I could buy it as it goes higher as long as I go up, bears try once, higher high, bears try twice, right? It's very similar, but again, you'll notice this is basically, it's a crown reversal in this context, but it's basically a two-try trap, right? You go up, shallow pullback, higher high in price, right? Trap low for that buy going lower. I'm not going to lie, I would definitely like to see this pattern above that trend line, right? We go up, we shallow pullback, we higher high. That would really make our job almost guaranteed if we could get above that trend line right here and use it, right, as a key level of support. So two-try trap pattern is certainly on my radar if we can get this thing making a run back higher, right? Or we go up, we pull back, the moving average holds, and they blast off the EMA. Great. Mark up the high, mark up that low, find that low, buy the low of that hidden channel, and we're whoop right back up into that trading range. And again, if for some reason it just starts to blast higher here, right? It blasts higher. If we have a big strong move that doesn't pull back, I don't care about the range anymore, right? Look for that two-try trap. Shallow pullback, higher high, trap low, right? And you're buying from there. Because anytime you see that much strength in one direction, you're probably not going to get, you're probably going to get one more leg, right? Bottom line, right? Anytime you see a strong move like that. So higher highs in price, shallow pullback, right? And trap low, risk below that low. Those are some great setups we're watching for now, right? As we go higher. Now, don't forget, if we sit here and go sideways, what do? We sit on hands. We sell high with buyer failures. We buy low with what? With nested failures, 1, 2, remember that from earlier, right? What's the best way to buy a bear market? Let them try once, let them try twice, and buy into their stops, all right? Obviously, you want to use, well, maybe not obviously, when you're going against the trend, I always recommend you want to load the boat, full-size position on your best trend-following setups, right? If you're going against the trend, though, I would recommend, right, what I do is I cut my position size in half. So it's a 4 contract, go to 2 contract, 2 go to 1, right? Counter trend trades, cut that position size down, be more conservative with that nested failure. That way you'll give yourself the best fighting chance. Because remember, the odds are not in your favor when you're trading reversals. So you've got to cut your position size down, let those bears, dig their own grave, as I always say, right? Let them wrap that noose around their neck. And then once they're selling once, selling twice, then you know exactly where you can be a buyer here to get that edge that you need for that counter trend reversal, right? So great opportunity there to be a buyer. As we go lower here, 1, 2, 3, break down. Remember, they got to hold the pullback and they got to show strength. If they can show strength, mark the low, mark the high, right? Notice how I draw that too. I'm drawing that hidden channel off the major highs up here, not the medium-term highs, and then we're looking to sell off the top of that hidden channel. Where's my target on this as we go lower? The target is, right, back down to that end of month February lows, 81.27, right? That'll be our big target going lower. Also, too, if we don't get that pullback, and I know I sound like a broken record right now, but I want to make sure you know the plan for tomorrow. If you're a Nasdaq trader, I'd like to get that 1, 2, 3 break down off the moving average. And again, I don't try to trade that breakout, because you can easily see we're right at those lows, right? You don't want to be trading short at these major lows. The measured move, the gap, or a lot of times what'll happen is it'll come down, try once, try twice, and go right back up into that range. You don't want to be caught holding the bag on that one, right? When the music stops, you've got no chair to sit down in. Wait for that thing to hold and jump, right? Then you know you're bearish and you can trust the next pullback. If it doesn't pull back though, right? If it just dumps and runs lower, it's that shallow pullback, that lower low, right into that trap high. And again, that trap high, you'll be amazed how often you'll be able to find, right, a little hidden channel up there, right, to combine off that, right, off that trap. Try to stack those levels of resistance to increase the odds of your success on that short trade. Boy, man, I'm really excited for the Nasdaq tomorrow. Nasdaq's got a bunch of big news tomorrow. We got the ISM at 10, remember. That'll be probably our big market moving event here for tomorrow's trading session. Let's wrap things up though now for the gold. Gold, of course, got a nice big boost from my boy Powell at the Fed today, right? They cut rates. What's bad for rates is good for the gold. Gold, of course, you can see is very bullish here today. There's a couple different ways you could look at this. I looked at this as a strong move up a pullback, a lower high, a higher low, and that to me looks like a range to me. I've got that now pegged as a range. So what do we do with a range here? We buy low, we sell high, right? We buy with seller failures off the low, right? And if we get a deep enough pullback, for example, I can buy with a seller failure here, right, at the low of that channel, literally buying into those stop losses of those counter trend sellers. If it really gets nasty, if it really tumbles, I've got my eyes on this area down here. That 1612 area would be a fantastic level. We'll see if we get it tomorrow. It actually goes all the way back to that prior high right there. That's a really attractive, that 1612 area. The problem is, though, is if we get that deep of a pullback, that's going to be one hell of a bear market at that point. So what's the best way to trade it if we do get that sharp pullback? Nested. You got it. One try for the bears, two try for the bears. Now we know where stops are. Right? And we're buying into those stop losses as the market fails to hold on. Does that make sense? Right? So here on gold, we got a nice strong bull run up. We know we're bullish. There's no doubt about that. We know we're inside of a range here right now. At least I think we're inside of a range here right now. It may also be a spike in channel here, which we'll talk about here in a moment as well. But if we can get that run lower, down around the bottom of the channel, down around the support trend line down here, that's a great spot to be a buyer, but wait for the edge. Wait for those bears to try selling off of it and simply buy right in their stop losses. The easiest money you're going to make in day trading is getting in with momentum against people who are getting out against momentum, right? They're not going to be picky about getting out of that trade once they get stopped out, right? They're going to get the hell out of that position, and you're going to get a great fill on that snap right back up into that trading range. But again, if we really get that deep pullback, what's the problem with deep pullbacks? Deep pullbacks give me great risk-reward ratio, but deep pullbacks come at a cost. There's a price to a deep pullback, and that is momentum, which means when we get those deep pullbacks, I'm looking for one try for the bears, two try for the bears. I would imagine you'll probably see a lot of them come into that trend line, right? But once we see once and we see twice, now I know where stops are. And a lot of times, these what I call nested failures, they'll run up, they'll quickly pull back for a trap low with a two-try trap pattern before we get back up into that trading range. So keep your eyes open for the deep pullback down around that 1612 area, right? Nested failure into a two-try trap, back up into that trading range. Those will be some great setups tomorrow if we can get that nice deep pullback. Now, don't forget, if we sink back into the range, do nothing, right? No trade zone. If we sit inside the range, we're buying low with seller failures. We are selling high with what? If we sit inside this range, how do we sell high? We sell high, waiting for it to go up. Buyers try once, buyers try twice, and we sell into those stops. Right? So again, if it sits here going sideways for a while, which it may tomorrow, right? They're looking pretty bullish right now, but that may not last. If we sit here for a while going sideways and I make a run higher here, can I sell this? I can. One try, two try, and sell back down. Very similar to move up, one try, two try, sell back down that we saw earlier on in today's trading session. Or get underneath the range, seller breakout, pullback failure, back up into that range as well. Again, all of these patterns I'm talking about, we'll go over them again tomorrow morning in our trade room. Get registered with all the links below the video tonight in the description or below the video on the trading blog, or grab that free course I keep talking about linked up in the upper right hand corner. Now, what if the market goes higher here? What if you go higher here on the gold? What are some options? Well, first of all, where the hell are they trying to go? Right? Where is this gold trying to go here right now? There's a level up there somewhere. There she is right there. It's 91.9, 1691. That is pretty much the yearly highs. It's pretty much the, I want to say probably the 5-year highs too, right? It's a pretty good number, right, for that gold. So 1691 is where they're trying to go. It's important that you know where the market wants to go before you go committing to trades, right? You always want to know the exit before your entry. Okay, one of the things we always talk about in our trade room, before you take your entry, you've got to know your exit. So our exit, right, 61, what was that? Was that 91, something like that? 1691.9. We'll call that 1692 just to be simple. What are two options for us? Option number 1, 1, 2, 3, breakout. Again, hold the pullback to the moving average. Strong move up. Hold the pullback. Hidden channel pullback right off of that high. Again, this requires a higher high, a pullback to the moving average, right? Strong jump off the moving average. Once we get it, mark up the high. I'm not going to chase after it up here. Mark up that high, mark up that low, and we're buying the next pullback off of that low. I'm not going to try to predict the breakout, right? If you try to predict breakouts, you end up like it did back here. The other option would be is if it doesn't pull back. It keeps running higher, right? Keeps running higher, shallow pullback, higher high. You got this, right? You got this. Repetition is the knife that hones, right? The blade of success, right? Or the stone that hones the knife of success. Repetition over and over and over again, right? We start seeing that big breakout. They don't pull back right away. Shallow pullback, doesn't pull back to the moving average, right? Higher high, you know what they're looking for, right? Trap high, right? Trap low on that two-try trap pattern. This is exactly why we go through all of this together every evening on this newsletter, because repetition. You're going to be so comfortable with these setups because you're doing them over and over again with me every evening on this newsletter. And don't forget, the best way to absolutely master this strategy is to come out and do it with me, because I can talk about this stuff until I'm blue in the face all night with you guys here on YouTube, but until you sit down with me, right, pull up a chair, look over my shoulder, do it with me every morning at the opening bell, 8 o'clock Eastern time. That's how you truly master these trade setups. Master your setups, master your discipline, right? Your mindset. It's really all about, right, having a good command over your technical stuff, but also having the patience and discipline to wait for the best stuff. Guys, tomorrow morning, every morning, 8 o'clock Eastern time, Monday through Friday, come out and join me tomorrow as an advanced member. I'll put all the links you need to get registered for the free course, for the membership classes, right? I'll put all those links in the description of the YouTube video. Don't be afraid to call that toll-free phone number. Don't let my ugly mug scare you off. Don't be afraid to use that live support tool on the right-hand side. I'm always here to help out. And as always, if membership isn't right for you right now, please don't be afraid to call me in the office and ask questions about brokers and data. I'd much rather help save you some time. You know, I lost a lot of time and a lot of money early in my career by using not the best resources. So feel free to keep in touch. Post those questions in the comment section below if you have any. Hit that thumbs up button for me if you liked the video tonight. And don't forget to subscribe to the channel. That way you never miss another great video newsletter. Guys and gals, what a great job today. Had a great morning in the trade room. I want to see you there tomorrow. If not, if I don't see you guys tomorrow at the opening bell, come back and see us again tomorrow night for the next edition of our nightly newsletter. My name is Joseph. As always, be well, be nice to each other, will ya? And be sure to vote if you're in a state that's voting here today. Make sure you cast that vote before they close up here this evening. As always, guys, be well out there, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.